So if you're an investor or a trader in India, this video is for you. If you're specifically trying to invest and make money being in India and only investing in India, I would like to highlight you why are you in a risk position and why it's important for you to understand depreciation and inflation. So if you already knows this term, you can just skip this part and then go to the next point. But if you don't, let me cover it in briefly what is inflation and what is depreciation. These two you can distinctly identify by understanding what is inflation. Inflation is something internal to a country, whereas depreciation is something which is globalized or from external factors. A lot of you may have heard about that a particular thing you go into market to buy at 100 rupees, let's say, next year it cost you 105 rupees. So what is this drop in value of 5 rupees? This is basically inflation. And where it comes from? It's basically due to money that is poured into the system by the government out of thin air. This is basically acts as a stimulus in the ecosystem so that our economy can grow. So government prints money, they give it to cheaper interest rate to the banks then carry forward it to businesses, gives to Ambani's, Adani's, which again is poured into the system, and it creates an economic cycle within our country. Depreciation is something which comes from outside factors. Let's say Indian government goes into the market. They try to buy oil, let's say. Last year, India bought oil at 100 rupees. But this year they went and the oil was 110 rupees. Why? Because the INR, the Indian rupees currency, has fallen by value. Why this happened? This is because USD has increased. Because most of the oil transaction in the world happens via dollar. That's why dollar demand has went up, and the war happening in the Middle East has basically accelerated this worsening of INR situation. I was just recently reading a data point regarding how much is the depreciation or global inflation of INR compared to USD, and I was shocked to hear that it is 10%. Initially it was 85 rupees per dollar, now it's 95 rupees per dollar. But as an investor, why this is important for you? It's important for you because when you combine these two, inflation and depreciation of INR, it becomes around 15%. You would have heard the investors, a lot of investors saying that a best type of return should be 12% per year. But if the value of INR is falling by 15%, your 12% will not make much difference because you're still missing 3% of gain. So basically, you are losing money by investing in just Indian ecosystem. And why I want to highlight this point is why it's very important to understand depreciation and inflation to understand money itself. If you're serious in making money or making investment decisions or trading decisions, you need to understand global economics as well as internal Indian economics. Right now in India is in very bad shape. Why? Because India don't have a narrative. India is predominantly dependent on crude oil, where 20% of India's crude oil comes from Strait of Hormuz. It's blocked due to war, which is basically has increased the crude oil prices. India is paying more to buy the same amount of oil, which is a super bad thing for the Indian economy. The only thing that can save Indian economy is the green energy. But even if green energy comes to India, the whole world is moving into a narrative of AI. And most of our IT services companies are not ready for it. A lot of IT services companies do a lot of standard work or substandard work where they provide services to the first world countries or second world countries. But if AI disrupts this kind of thing, there will be a clear downfall in the economy or in the IT sector at least. That's why a lot of foreign investors are just fleeing the Indian market. So when foreign investors flee from Indian market, they basically takes the INR, dumps those into the domestic institution hands. Domestic institutions are basically common people. Foreign investors are smart enough and they're just dumping INR in the hands of common people, which don't know global economics. They're just fleeing away. They're converting it to USD, Euro, and they're moving away from India because they know that India doesn't have an AI narrative. India cannot compete in global market in AI infrastructure against China and USA. We don't have any edge in AI race. And I don't know where this AI race will take US and China as well. I'm skeptical about that as well. But that's not the point of this video. The point of this video is what should, as a common person or an investor in India or a trader in India, you should do in such kind of situation to make gains out of it. Because in the end, Indian government is not going to come and save you or save your investments or savings. Things will happen and your investment will just corrode over time. How to save this? To answer this, I analyzed a lot of top institutions and top 1% smart people, what they are doing. A lot of smart investors are not just focusing on one single economy. Even in India, smart investors are moving out of India and looking for global opportunities. They are trying to invest in crypto. They are trying to invest in AI related stocks. They are trying to invest in software companies of US. Some are moving from INR. So just by looking at the pattern, what are the steps or what are the methods that a common investor in India can do or replicate such institutions and top 1% investors? You just have to look at their what they are doing and just try to replicate those in your trading or investment decisions. You don't have to make drastic changes, but make small changes to your portfolio. So let's understand what the top 1% investors and institutions are doing so that we can try to replicate them. A lot of investors are moving abroad, not just moving abroad, but they are moving their investments abroad. They are looking for global opportunities and they are not specifically stuck on a particular investment or India as a whole to make returns. They are trying and exploring opportunities in US, Japan, South Korea. They are looking for opportunities where they can make money. Second is they are dumping INR. They know that INR is the weakest during war and the added inflation. So they are dumping INR and moving into stronger currencies like USD, Euro, and some countries in the Middle East. Some investors are trying to play the crypto game because crypto is a globalized asset. Anybody can come in and buy it. Blockchain is completely open source. So you can just go and invest and self custodize those. You don't have to give control of your asset to anyone. They're also trying to play the proxy game because a lot of the time crypto is replicating not one on one, but sometimes it's replicating the software sector of USA. So it's a good proxy play if you want to look in that kind of opportunities. And a lot of top investors are looking for pockets of investment opportunities where they can make money. Also, a lot of them are sitting on a large cash positions because everyone thinks that this war, COVID situation, as well as AI is in a bubble. This has created a triple pillar situation where any pillar falls off, we'll be seeing a black swan event. And this fear is not just in India, it's a global fear that is happening in the market. There is a string of events that has happened, which, if there is a cascading downfall of those events, we'll be seeing a black swan event in the market. What are those cascading pillars? The first is COVID. COVID is the trigger of everything. COVID created a lot of inflation in the market, global market, not just India. The second thing is that then we saw a AI narrative build up, which has led to an AI bubble that is created right now. And some says this is similar to dot-com bubble. The third thing is happening is that there is a massive unrestrained war going on in the Middle East, which is blocking 20% of crude oil. These three events are triggering three pillars. If any one of this cascadingly fails, this will snowball into a big black swan event. So investors are trying to prepare for that. And what about you? What are you going to do in this situation? Let me in the comments below and see you later.